Hi, everybody. I'm Bill, Price Physics. And in this video, we're going to go over Monday, Tuesday, Wednesday, and Thursday, March 27th through March 30th, 2023, the micro S&P chart, going through and showing you all the setups, giving you the components, doing the setup first, showing you how to utilize and best understand the GUI, and then run through the week and show you all of the best places to trade. I won't show them. You'll see them for yourself. So we're going to start here Monday morning. This is early. The components of the chart. This is a 2401 or 2,401 contracts per bar volume bar chart. Every bar is made up of the exact same amount of volume. The P's are price failures. That's where price naturally in this environment will pull back to give you, call it a pivot point or a bouncing point that price is going to move away from. The F's are failed oscillations. They are broken through or they have breached a price failure, but they have not breached a new low. So those are, failed oscillations. And then you have the N's, which are new support and new resistance. The background colors, green or white. White designates that momentum is up, green down. Now, all the colors on these charts are controlled by you. You can make these any color that you want. I've just used these colors forever. These aggravate most people because they're the exact opposite of what they're used to. And I've done this from the very beginning on purpose to be the exact opposite of everybody else. So I don't mean to be a contrarian, but it was just easier for me to learn it and to understand myself when I constructed these charts. The green bars are the bar closes lower than it opens. The blue bar, it closes higher than it opens. So these are all natural components on the chart. Now, we can see how these all play together, but we see how it plays together naturally. Indicators are used all over the place. Indicators, antique indicators that, stochastic, MACD, RSI, even the ERG. I mean, as far as I'm concerned, it's still an antique. The reason indicators are aggressive or old school is because they lag too much. People were always constantly trying to smooth those indicators out. Well, there isn't anything smoother on the planet than a naturally constructed chart. And what I do with the volume bars, it's naturally constructed. There's no idiosyncrasies. There's no, time is a painful thing to traders. Time bar is even more painful. So let's get on with it. Here is Monday morning. As you can see, going into Monday morning, price was going up. The expectation is when you're looking at constant volume bars, it's just support and resistance, but it's natural support and resistance. So it makes more sense. We see it go up, made a new high right after, midnight. It came back down, failed. We saw consolidation. Now, anytime that you get consistent back-to-back price failures of resistance, failures and price failures of support, immediately you know that consolidation is going on. And we never want to trade in consolidation. We want to trade as price comes out of consolidation. So what we're looking for is each one of these labeled oscillations is a decision point. It's that easy. And when I say that we're constructing a chart so that you can read it, every time a label appears on the chart, it's a word, or it's a phrase, or it's a decision point for you to make toward your trading. Is price going higher? Is price consolidating? Is price going lower? Is this a place where I need to get in? Now, over the years, we've learned that the best opportunities are when price is coming from a price failure or a P, and you're trading toward or the last oscillation on the opposite side of that position. So if it's a price failure of support, you're looking for a resistance point that is a new high. So there's no new high here. You know, we have a target here of a price failure. This keeps us out of all this consolidation. Finally, here we break out and get a new high and then a price failure, but you know, we stagnate right here, right about now 2:30 in the morning, and that's normal. This is when the European market opens up, and this is where, you know, the market starts making that middle of the night push, and you can see that's exactly what it did. The resistance here, you know, you compare, you know, white background areas as sequential and green background areas the lowest point versus highest point, and you can see the highest point here. You see price as it went up to challenge this top, it failed. It couldn't make a new high. So at this point, this is a failure, and that's why the market dropped off. So this is pre-market, giving you a little setup here and going a little slow into our open. It bounces around 4 o'clock in the morning, and as it bounces, it starts moving up. We see a little bit of consolidation in here. And that consolidation is, again, when you have these back-to-back failures. And again, the overnight session like this isn't unusual to see this. You have consolidation here. What I've tried to do is to be able to pinpoint those. But more so, what I want to get you to understand is the only reasons for you to trade is when you have the utmost confidence that you know where price is going at any given moment. Here we come in around 8:30 in the morning, and we see that the market's in consolidation. And this is where I go grab a second cup of coffee and, you know, flip something on one of the other screens as news, waiting for the market to determine, you know, is it going to make a new high of resistance and continue? Is it going to make a new low of support and continue? Or is it going to continue this consolidation? Well, we see it chops, plays out, you know, comes up, drops, and okay, now we've got some targets of support. Great. Well, wrong. Immediately it goes up with no entry point and goes right back up and takes out resistance again. Okay, I don't care. I'm only looking for good trading opportunities. So we come back up again, makes new resistance. And again, immediately we hit a little consolidation. If you'd have gotten into this trade off of this price failure back up to that new high, excuse me, you got faked out, 1 bar and out. I mean, choppiness. So you're just waiting on those, what I call gimme trades, and I'll show you. So then price pulls back, gives us a failure. You know, it took out, you know, the match and the price failure here, came up, gave us a failure, confirmed here on this low. Now, at this point, when it breaks through here off of that bar, you know, I'll stay away from it. I'll wait until it confirms a little more. But any place in here is where the market starts to break down and short. You know, and this here around 10 o'clock in the morning, remember this is Monday as well, it's chopping as well. Because not only, and I want to hold off and so you can see this, you're getting the failures of resistance, green background. Everything's telling you price is going down, but then you're getting this. You're getting the price failures and the failures of support here, and to offset any confidence that you have. Red bars. Red bars are when the open and the close equals. So you see those red bars as pivot areas or transitions. You see here it bottomed, pivoted going up. Here it pivoted, you know, red bar, and then it continued and then pivoted down. Red bar here, and then nasty. Here's a red bar, and then it dropped. Red bars are a point of caution. So, now it's 10 o'clock in the morning. If you're looking at this and, you got aggravated at this point on Monday, you can go ahead and walk away. If you hung on a little bit, you had a couple really nice trades here. You had your price failure trading back toward a new low. There's your confirmation bar. Your entry is here. And if you got out on the price, if you got out as you're moving down, your 2-bar exit here gives you about 7 points. Now, remember, this is per contract. We're looking for averaging what I call 100% of margin per day. So your margin for trading these contracts, $50. That trade right there was worth 35. So we're almost at 100% of margin. It pulls back up, drops again. At this point, remember, you're at 10:30 in the morning. Considering this is what the market gave me and, readable, I'm done. I mean, I could sit here in the rest of the afternoon. If you want to take a break until about like 1 o'clock or so, that's fine. But, as you're going to see as we go through here, we just get a lot of consolidation on Mondays. Now, a lot of this currently is because of the manipulated markets. The feds are out there propping up the market by buying equities. So, as that occurs, with all the turmoil going around in the world, there's no reason our market should be going up the way it is. So, this is what happens when that does it. So this is why reading the charts so much more important. You're not falling into the trap of just looking at the market and going, oh, I know where it should go. Well, we know where it should go, but we can read a chart. We know where it should go, but we also know where it is going. So as you can see it here, into lunch, she just fails. She drops a little bit more. You could have taken a little bit out of here, not much, just because as soon as it broke momentum to the downside, it went right back into chopping again. But again, as you can see, and it did this all the way in through lunch, it was just, back and forth and chop until the afternoon. And then the afternoon, right after lunch or, 1:30, it gave you some nice moves up. White background, you're looking for the up moves. Same here. Black once it's or green once it's confirmed down. And then back up here. And what it did into the close, it came up here to make a new high, couldn't take that longer term high out. And then as soon as it did that, pulled up, failed. And this is where the failure here as the confirmation of this top really is poignant. Because as soon as that top confirmed, it failed to go higher, especially with the momentum being down. That's when the market collapsed into close. And this is another good time now, being able to trade into the close because of so much skepticism of what's happening in the market each day. Now we're going into Tuesday. Tuesday, it starts off with some consolidation. It pops up until about 3 o'clock in the morning. Get some news coming out of Europe. This is Tuesday morning. That news, we give a price failure here, confirming that this move up is done, and she drops. Me personally, and the guys, I mean, we make a joke about it that, we all should be up at 3 o'clock in the morning, see what's happening in the market, throw in a trade and go back to bed. Because lately that 3 o'clock trade has just been spot on. And I'll be setting my alarm next week for 3 in the morning. It's just, that's why they made stops. Now, so we see it after 3 o'clock, it drops, it comes up, gives us another oscillation, another decision point. It said, for one more drop, it gets another drop, it tries it one more time. Now it's just losing momentum. Part of the reason it's losing momentum is around 9:30 in the morning. 9:30 in the morning, it's just like, religiously, we just take a break. It's like if something's setting up, we're preparing for it. We see that the market's making a new low, but, we'll see. And that's exactly what happened. Came up, took out a little resistance, then came down, and we see these new highs and new lows corresponding each other as ascending consolidation. So we get that consolidation. It breaks out a little bit up here. We see it start to break down here and then drop. The trade right here, this price failure and that confirmation bar right there, absolutely beautiful. You get a color change to tell you that there's a change in momentum. Then you get a price failure to tell you, here's your starting point. Then you get your confirmation bar going, okay, right, now it's time to jump on. And again, you look at a trade like that, just that one there, 10:30 in the morning until that one died. You get out on that red bar down there. And that one's 9.5 points by itself. The point is if you're patient enough to wait for a good trade, only trade like 8:30 to noon every day, you're always going to make enough. Well, why do I like the micro S&P? Well, what's enough? One contract here is, we're not done here with the morning, but say $50. Let's say that you're making $100 a day per contract. $100 is 20 points. 10 contracts is equal to a big S&P, a big E-mini S&P. So you have more control personally on the number of contracts that you trade. So you have more granularity. You want to trade 2, you want to trade 3, you want to trade 5, you want to trade 8, you want to trade 20. You have more control over the amount of liquidity that you're putting into your own personal trade. So when you get out of that trade, she hits a pocket of consolidation. It's like, again, when she consolidates, you just throw your hands up and go, homie, don't play that. So momentum moves back up. We see it starting to confirm here. We're not taking it because our targets aren't new highs. We don't break out a new high until that bar right there. Once we get through that, we take out that high. We go, okay, now, price is going up. Well, let's be conservative. Here's some price failures to jump on, but we know the price failures are going to be, short-lived in the beginning. And that's, usually, but it's nice to take them. If you're then here, you got, maybe a point out of it here or a point out of it here. But once this pulls back, okay, and you see that it's got the momentum to go back up, you have your failure here, your confirmation bar here, where you've already broken through your price failure here. So at that point, when that bar closes, you have a new high as a target. So the entry then becomes right there in the open of that bar. Now, instantaneously, the red bar is up here, but 2 3/4 points. Momentum's still running up. Price failure, red bar confirmation, no. Match, confirmation, no. Price failure, confirmation, this high, no. So, right now we're 2 bars into this. We're still moving up. Failure, confirmation bar, you're back toward trading toward failures and you're done. And now you're in the afternoon. Now, remember, that's morning trading. One of the things that we found out lately is your afternoon trading is, has flipped. Used to be the morning trades were the best. And then the afternoon was kind of sluggish. Well, the government has turned that upside down because now everybody's squeamish in the morning and they're throwing all their chips on the table in the afternoon because everybody wants to see what everybody else is doing going into close. I've never seen the market as skittish like this. But anyway, starts rolling over in the afternoon. And this is an interesting top right here where, right around 12 o'clock, we get a new high. It pivots, it pulls back up, creates a price failure. And this is like, I'm a grandpa. This is like grandpa making it up the stairs. A little farther, he breaks the price failure, gets the failure. And then he finally breaks the failure, but he doesn't quite make that new high. So even though this is a new high compared to the failure, this is an absolute collapse of price. If you want a further confirmation of that, that arrow designates that this is failing up here. But there's your price failure toward a price failure. Here's your price failure toward your new low. And at this point, again, now here, and you can see all the failures up here, that all you're looking for is your best shorting opportunities. Red bar, green bar, nah. You know, green bar, okay, great. And then my second bar out here, you know, basically break even on that one. And you're going, okay, where's it at? So looking for that one. Failure toward a price failure, no. Failure toward a failure, but the confirmation breaks it to give me a new low. So there's my entry. My exit's going to be 2 blue bars. We chip out 3/4 of a point. We see it happening again here. And then a collapse here. The red bar, no. There's our price failure through new bar, and there's our entry. And this is where we nailed it. There's my exit on my red bar, my entry. There's my price failure. It took out, you know, so now my target is my new low. There's my confirmation bar, and there's my entry. So now there's your morning trades. Here's your afternoon trades. And again, you're not done yet. I mean, you still have one more trade here to the downside. There's your price failure. There's your confirmation. 2-bar exit. And there's 3 more points there. Now it hits this bottom, it comes up, and she goes into consolidation. Stand aside. 2 o'clock in the afternoon, it's like there's a failure of support, breaks out new resistance there. Okay, buying opportunities. But it just basically piddles into, again, right, going into the close. This time it goes up. So now we're going to go into, Wednesday. We see market opens up in the morning, starts to climb. For the use in Europe, you had some really nice moves here in the morning. Momentum is up and giving you nice entry points, all these price failures to enter on the way up. Now, you can randomly take these trades as an entry as long as you're taking them here when you're making new highs and you've got your price failures shooting off like machine gun. Comes down here around 9 o'clock in the morning, pulls back, we get a new low. Great. Well, it's a new low, but it's a failed low because support to support, it's failing to take out support. But we didn't get an entry here. No entry here. So now what we've done is we hit after that pocket, we go into complete consolidation. So out of that consolidation, which is massive at this point, it starts right before 9:30 and runs all the way until about 10, 15 minutes after 10. With all that consolidation, you're thinking, you know, market only goes up or down. So what's it going to do? Is it going to go break to the downside and then reverse to go back up? Or is it going to make an extended move to the downside? All you're doing is looking at these labeled oscillations, these labeled points to give you that direction. Green background, price failures, price is going down. All these are shorting opportunities until you start getting your failures and your price failures of support, letting you know that consolidation is starting again. So the combination between the background color changes, really simple. One color's up, one color's down. The bars themselves, bars making new highs are one color, bars making new lows are another color. Bars that are transitional bars where the open and close is the same is another color. The labels themselves, I mean, you're literally reading the chart based off of the natural information on the chart. These labeled oscillations, the background colors, they're showing you information, but the information they're showing you is coming directly from the bars themselves, and they don't lag. They are instantaneous. When the bar closes, everything's there. Everything is the only lags to the close of the bar. I will put it that way. So comes into the afternoon, coming into lunch, we create that bottom, breaks out of resistance, start making new highs, and we see the exact opposite of the move down. Now we start seeing failures of support and resistance making new highs, or matched highs. That's your read on the market, saying out the market's going to continue to go up until what? Until it fails. The failure here was a short breakdown. You got it broke through the failed oscillation here, pulled back shortly, went right back up, and into the afternoon, into Thursday, pulled back again, then right back up. But each one of these individual areas give you those pockets. If the chart is readable at the time that you're entering into a trade, wonderful. If the market is consolidating at the time that you want to trade, there's no reason. Take a stand. Stand aside and walk away. Now we see how the market goes into from Thursday into Friday, or excuse me, Wednesday into Thursday. Consolidated going into the close on Wednesday. Thursday morning it pulled back, and on that pullback, okay, it came up, broke through resistance on that run up. Now, physics, the GUI, PRICEPhysics, the GUI, is good on any chart. I mean, you're able to do a daily chart, you're able to do weeklies, monthlies, any increment that you want. You're in complete control of the speed of the chart. And that gives you so much power and so much control, because you're not putting yourself in your hands of somebody that's saying, let me teach you to trade. No, learn to read a chart. You can trade all by yourself. And not only you can trade by yourself, you can trade any speed of chart that you want. Now, how does this chart this morning play into the daily? Well, there was the daily. The daily this morning on the open triggered a buy. Now, why? Well, it was a price failure. The confirmation bar broke through that failure. So at that point, the target was a new high. The entry, the open of that bar, was 40.58. Currently 40.87 and a quarter. Now, even if you're going to throw your stop at the bottom of that bar, I mean, you're still up 30 points at this point, $150, and that's on the daily chart. But that daily chart has already gave you the confidence this morning to be able to see where price was going. So we saw that price is going up. So all of these failures of support are just buying opportunities because you're making new resistance. You have little pause and hesitations like you do here, where it comes up, price failure of resistance, it pauses, and it comes down, fails, and it goes right back up again. You're going to have that. Think of each one of the price failures as being where the market breathes, where it naturally breathes. Each one of these markets, think of these oscillations on these charts as a resonance frequency of each chart. And this is why you can trade any speed of chart that you want. You know, you like a 4,555 bar chart. Good. Let me tell you something. You're the only one trading that chart. How would you like to understand how to read a market? Simply just read a chart and trade, and be the only person trading that speed. I mean, it's mind-boggling. So we come here, price continues to go up. We see a couple little small pockets of consolidation before 9:30 in the morning. And we see it come up here. It makes a new high. It pulls up again. It, barely makes a new high here. Going into 9:30 in the morning. This was pretty today. And I'll show you why. Because this whole top up here was telegraphed beautifully. It went up and made a new high, came down, consolidated, potzed around a little bit. And I'll extend that out a little bit into here. Went up and made a new high again, broke through. Great. Now, as soon as you get breakthroughs like this and confirmation, take them. Those are easy trades. So you get confirmation of resistance, new support. There's some shorting opportunities here. Your red bar is your warning signal telling you that, you got a potential reversal coming, and it does. This red bar is transitional, telling you now you're going to get an extra pop in that direction. But anyway, it reverses here. You get a little pocket of consolidation. It goes right back up. Well, this whole bottom here is a failure off the last bottom to go back up to test this resistance. Well, this is experience, but I look at this and I go, hey, this is, people call this a double top. There's no, unless it exactly matches, it's not double. This went up, and I used to call this a divergent top when we had the indicators. Now I just see it. But it's like when I see this, I'm going to get another test of this top and a failure. And right there it is. Price went up to test this and it broke down. Now, momentum's still running at this point. Wonderful. I see this failure and I'm just sitting here going, when momentum turns to go down, I'm all over it like, flies on stinky food. And right there it was. We come out of that bottom, come out of that top, that failure. As soon as it breaks down, there's my failure, there's my confirmation. And we'll take the chunks out of this. There's my failure, there's my confirmation. You see it start to transition here with the blue bars. I can get out there at that point. So everybody's, my thing is it's easy to get into the trade. When you get into the trade, you manage the trade based on your account. If you want to take 5 points out of a trade and then, get out of it, even if it goes 20 points, if that's what you're comfortable with, do it. It's all about building confidence, and you build confidence by making good decisions, taking profit, and going and make another good decision again. If you make a bad decision, take a pause and go, why did I do that? It's real easy. You just misread the chart. Now, price failure, or to new low. There's my bar. There's my confirmation bar, the right color. There's my entry point right there. I start seeing new low, and the new low and a blue bar bothers me. So when I get this and starts to chop around a little bit, someplace down here, I'm just going to exit out of that position. Okay. So there's another 3.5 points. Comes back up again. This time I've got a price failure. I got a green bar. Wonderful. I got a price failure as a target. Now, some of the guys will take that trade. They'll go, well, everything's in my favor. If I take that trade, I have to break through that point. And I'll show you this. And it's like, that's fine. If you want to do that, you have to stick with it. You can't let that trade get away from you. So there's your confirmation bar, right? There's your entry. And then you get a red bar down here. It starts chopping. You're out of that trade. There's your entry. But 3.25 points. But remember, you had to break through that price failure on your entry bar. I mean, it can't hesitate. It hesitates, you're out of there. Okay. So at that point, now it starts to go through and consolidates. It comes up and makes a new high. Great. Well, that new high is a failure of the last new high. So now I'm looking for confirmation for another short. There's my price failure. There's my match. There's my price failure. There's my new low. There's my new low. There's my confirmation. And there's a red bar exit right there. I get a 0.5 point. If I had confidence in that, and I'll show you the difference in the two, if I saw it drop, if I blinked and the red bar got away from me, where would I get out down here? As soon as I got that blue bar, I'd be out. So there's your difference in those two trades, with the red bar exit and hanging on. Hanging on is risky if you're, not able to read that chart. Now, now we're, right after lunch, into lunch, we saw it drop. Going to take a break. We get another move down here. Going into lunch, into 2 o'clock in the morning, we see this setup. Well, it's taken out all these resistance little failures. We've created a failure. The price failure here now becomes perfect, because as soon as price breaks through that failure, that's where the color change takes place. So at that point, we know momentum's up at that point. So Frank, Dave, they jump on that right there at that point. As soon as that color change occurred, they jump on it. And that's fine. That's a little more aggressive. You can do that once you are really better at reading a chart. And I'll show you how to read that. Well, there's your failure. You're not trading toward a new high. You're trading toward that failure. So again, that target has to be breached. Your confirmation bar doesn't break through. Your confirmation bar it goes up and tries, but it can't break through that failure. So the next bar comes in, price pulls back, goes up and matches the failure. Oh, okay. I now have a better confidence level that it's going to break through. Well, the next bar, the open of the bar, breaks through. Well, at that point, any place in these bars aggressively, well, and I'm going to take it right there at the top of that bar, you can take that trade. And then again, any sign of weakness, you start getting green, blue, green, and here it starts to drop any place in here, and there's a 5-point trade. Goes back into consolidation, end of the day, I'm not sitting there aggravating this and, turn it off and walk away. But anyway, we see what's happening here on Friday morning. Price gap down, immediately gap back up. Again, we've got an issue with the government buying equities to prop the market up. So this is what we do. I hope this helps. This is just an understanding on how to use the GUI. It's really, 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 really simple. People just don't realize how much control they have trading if they trade using these charts. I invented them. I've spent 30 years constructing them, building them, and presenting them so that you can utilize them and make money. It's taken us a long time to be able to put this together, and now it's yours. It's simple, people. Don't make it harder than it is. If you got any questions, email them out there to me and I'll answer all of them. You have a great day. PRICEPhysics 2023. Today's March 30th. Have a great evening, and may the logic be with you.